Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here's an example that shows you a little bit more clearly how momentum and the change in momentum can affect the outcome of a security. We're looking at the EUI, which is the US dollar-euro pair represented in the option. And this is a daily chart that goes back for, well, about a year or so. And this chart was actually something that I used in the last class that I did for the ISE, and we were talking about these changes in momentum or shifting pace. And what you can see here is that even though you might have strong upside moves, the momentum can shift on smaller time frames that will eventually lead to a change in direction. So in this case, we really had more of a sideways trading range here from the end of October going into December of last year. And it's not that you necessarily had a substantially great change in pace on the smaller time frames. Each of these upside moves was still pretty strong within that range, but the overall pace began to change. So if you're looking at this here as a series of highs, and back and forth action, then you can still have sharp upside moves, but if you transect that channel compared to transecting the channel going into that action, then you will see more clearly that change in momentum. And you can see that a lot easier going into January and March of this year, where transecting this upside move, we had a much stronger than average upside move. And then transecting that change in momentum here, you can see there was a slowdown very similar to what we saw in D in our template, in our previous template. This momentum again shifted, allowed for a stronger breakdown, more gradual upside, just like we saw over here with J compared to I, and that favored a break lower. Now, when the momentum is slower, going into a support level, let's say, for example, let's clear this here. Let's say, for example, coming off of this high, we had this short trigger. But even though initially you would expect a stronger drop coming out of that level, let's say it doesn't form as strong of a drop, but it still attempts to form a shift in momentum here. Then if this again tries to break lower, the chances are going to be higher that instead of breaking to a new low, it's going to hold that zone of the previous low before it really decides to break like a larger trend here. So instead of setting a target on this reversal for a stronger breakdown that ends up being down here, which is congestion from this previous congestion zone, you would want to go ahead and when this channel breaks from this pull up, when this channel breaks here, you would want to go ahead and look for closer target levels or closer support levels than you would otherwise. If this pace and momentum does not change as strongly, let's say you still have this large run up here, a shift in momentum, but it's not as great of a shift in momentum, then that's also an indication to use closer target levels because the chances are it's not going to follow through as quickly. But if the momentum shifted more strongly and gave you a setup on a channel break here, then you can look for farther target levels. This could even retrace this entire upside move. Let me show you that here. So if this pulled up here, had a more gradual shift to new highs, and then broke lower, the chances would be higher that it could break more quickly back into this previous zone than it would otherwise. So you're looking at basically how the momentum plays a role going into these reversals in determining how far it's going to get. Oftentimes, there's a couple of different things to look at depending upon what strategy you're looking at. So if you're looking at a strategy like this reversal pattern up here off of the highs, you're going to be looking generally for different types of target levels than you would a continuation pattern. For reversals off highs such as this, typically what I will look for is the beginning of where you had that strong upside momentum is going to be my target zone on the setup. That's just generally speaking. And usually there's congestion right about there, so I'll take it right about in the middle of where that congestion is. And that's going to be typically the easiest place that you can get to for that type of setup. Here's a continuation move, though, here in C. And as long as this pulls up higher by 50% or less this previous drop, you can look for a much greater target level than the previous low, which would be here. So even though this served as an initial support zone in May, it was able to break through it to a new low going into June. And looking at sorry, I'm actually going to skip ahead here. Looking at this here, this is another color. They don't give me white. Okay. But one of the target levels, well, sorry guys, the highlighter does not appear to be working on this black screen. Pencil does, though. Okay, so if we look at things like continuation moves, like this here, then what you can see is that as long as the momentum is comparable, you can get an equal move target. Going back to types of support and resistance, what you will see is that I listed here these equal or measured move levels. And basically what that refers to is when you have a situation where the momentum coming out of a setup, such as a continuation move, or most commonly a continuation move, is as strong in momentum as the move going into the counter move here, then your most common target zone is going to be an equal move of this previous drop, as opposed to this momentum shift pattern in which the target zone is typically going to be the zone of that previous low. So looking at these target levels and these shifts in momentum, let's look at a couple other examples here to show you what that looks like. Here we go. Okay, so there's these stronger than average upside moves, but the overall shift in momentum is changing, just like we saw over here on B on the upside, with a slower move into C, and then the change in momentum on D. So this action is very comparable to this upside in B on our template, and then the slower upside move on D. And the way you can view this change in momentum is if you take the highs of a trading channel and then the lows of a trading channel and connect those, then transect that move. So basically you're cutting that channel directly in half. That's going to show you that shift in momentum that's represented here. You could see that if you drop down to the smaller time frames, you do have that V type of action. Just like we saw on the template with E going into F, or sorry, actually it's reversed. Well, here's the start of it here. E into F, and then basically this pullback here. And then on the template, you can see that change in momentum on J, and you have that represented up here as well.
Thank you for listening to our podcast. To find more podcasts, please visit www.isc.com/podcasts.